See what you have to look forward to.
No.
Crotchety old man.
I promised my kids I would never be as pessimistic as you are.
I promised my kids that too long ago, and look what I mean. I'm here. You know?
Yeah.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Welcome to the Market Moment. My name is Matt Walters, and today I'm with John Martfeld.
Hello.
And Lee Mackey.
Good morning.
And we're going to talk about a few things. Big week last week with the Fed cutting rates. Came out, cut by 50 basis points. Initial thoughts on, was that what you were expecting? And do you think, was it what the market was expecting? We can talk about what the market's done since then.
You know, at our podcast last week, you know, we kind of talked about this 25 versus 50. I called for 25. They delivered 50. And, you know, it was one of those deals where I wasn't surprised. I mean, this has been a weird cycle where, I mean, had they not raised it all, you could almost have a good argument for it, and you have a good argument for 50. You know, so it was just, you know, it was all over the place. The markets had priced in 50. I mean, it became apparent in the last week. I do believe that it was 25 until a week before, and then it rapidly turned into a 50 basis point cut. Markets loved it, even though it was interesting. On Wednesday, the markets went up, then went down.
Yeah.
And then Thursday.
Negative. Thursday shot up.
Yeah. So it was a good start. I'm not getting all excited. I don't know if we're going to get another 50 basis points between now and the end of the year or not, but you know, we'll see. What are your thoughts?
My thoughts are the Fed lives in the wild, wild west. There are nobody that guides them, nobody that oversees them. They do whatever they want, and there's no we really don't have a set way of doing things. It's just a little bit like the sentiment was that the majority thought it was going to be 50 basis points. Some thought it should be, like you said, 25, and some thought 0 and so on. And I think that we get overexcited about what the Fed is going to do. But since 2022, they've been a big part of the conversation because they raised rates so fast. And then now it's been always this year, the entire year, we've had this prediction of rate cuts going back to March. We were supposed to have our first rate cut in March. Sure. Then it was supposed to be in May. Then it was supposed to be in July. And then, so the fact that it's 50 basis points to me reflects a little bit about that they could have been doing a quarter basis point, maybe, you know, the last meeting, right? So it's not that shocking to me or to the market. And it's kind of what was expected, and it might get us kind of caught up. It's going to be the next meeting and the next meeting, and how far are they going to go is the next question, and that's the next, you know, thing that's going to stimulate or
and that did come out that had it not been for Jackson Hole, they would have probably lowered the time before. I thought that was a little interesting. So they were, in their words, they were playing catch up.
Right.
So what are your thoughts?
Yeah, I don't have any thoughts.
You know, I mean, it impacts the everyday person. I mean, people who are listening out there are like, well, what does this mean for me? Well,
mortgage rates have come down.
Indirectly, but I mean,
they had a person on, expert on, and they were talking about how it's completely their loan applications have shot up through the moon because of this one meeting.
Mortgage rates
had come down.
They had been coming down.
They've been coming down. I know, but they're going to they're going to attribute it to this, even though it had been coming down. Yeah.
I'm talking directly. I mean, if you have a credit card, your interest rate has come down. If you have a home equity line of credit with a variable rate, your rate has come down. I mean, if you have anything tied to prime, you know, that rate got cut by 50 basis points last week, 0.5%. And so the cost of borrowing automobile loans coming down.
Yeah.
So now there's a long way to go to get to where we were a couple of years ago. We may never get there, and we probably won't.
Right.
But to the everyday borrower, what does this mean? It means that the cost of borrowing is less expensive. Yeah. Theoretically, a little more money in their pocket after bills are paid, with all things being equal.
Right.
So it you know, it's intended to kickstart the economy. John, I'll ask you this. Matt can jump in too. your thoughts of a soft landing now? Greater than 50%?
My thoughts are that it's not. Of course, I'm the pessimist here. And I'm going to go back to the last, the Fed has made that point years ago that they were going to keep raising rates till the inflation rate got back down to 2%, correct? And it's not quite there, but this is what I think is kind of a misconception about the inflation rate. The inflation rate shot up pretty dramatically, and we had historical, 1 year over 1 year inflation. And then this year it's definitely come back down. The problem is, if you go back to 2022, you go back to 2020, and the price of things have gone up very, very, extraordinarily high. And it's not that inflation, it's not deflation. It's not like we're having prices come back down. So even though prices are only going up 2.5%, they're still going up, and they're still going up from a rapidly rising going up price structure over the last 2 or 3 years. So to me, it's not as good of news like when you hear it good. But the Fed's doing what they think they have to do, fine. But I look more at, again, going back to, like you're just talking about, money in your pocket versus how much can you spend going out. And I do not see any great signs that the middle class and under are going to have a better time of things right now. I don't see it. And that's my pessimism, but it's also data that I read.
This is what drives me crazy on the inflation data. And let me preface this by, like, I get it. Like, we're feeling it. We've adjusted things. Like, I don't mean to belittle how impactful the rising cost of things are, right?
Yeah.
Like, it's it stinks, and none of us like it. That said, for 10 to 15 years, inflation had been 1.5 to 1.8%, right? The 100-year average is over 3, and so, like, what we've seen the last 10 to 15 years, if you just, and I've said this, and it's so simple, and some people might think it's dumb, but if you just believe in the basic law of, like, reverting to the mean, you're at some point going to see and experience a higher inflationary period because we had such a long and low inflationary period. It doesn't make it stink any less. It doesn't, but this shock and awe factor, and like thinking that, like, well, the last 10 to 15 years, we've got to get back to that, and that's the new expectation. It's like, but that's not what it's ever been sustainably. So,
I agree with you.
The 10-year average now, even after the last few years, is still materially lower than the 100-year average.
100% agree with you on everything you're saying, but it doesn't help. It doesn't help the 35-year-old married couple that is struggling, and that's my concern. It's not even about. I agree with you, macro level, 100% agree with you. My concern is not about any of that. I'm just looking at economic money, dollars going into the economy to keep corporate profits up. Mm-hmm. To me, and I look at unemployment data, and sometimes the unemployment data can be skewed a little bit. We have all of this influx of illegal immigrants that are going to eventually somehow get placed into jobs or there's going to have to be something done there, but that could skew the unemployment numbers down a little bit as well. To me, I look at all the data and I don't like what I see. I've been doing this 25 years and I don't like the data.
Okay.
But that's just it could be a soft landing, and COVID was completely unique, and what we've gone through is completely new. None of us have been through it in our lifetime ever. So whether it's a soft landing or not is I hope we do, and I pray every day that we do. And sometimes I feel like I'm going to be completely wrong, and I hope I am.
And if you believe in all the technological innovation, the AI, everything that's going to happen, as I do, I think all of it's legit and it's going to impact our lives and has impacted our lives, then that's all very deflationary. Right?
Sure it is.
And so there is a deflationary force that's inherently there because of technology and innovation. So as long as we continue to incentivize that, people starting companies, innovating, trying to improve, become more efficient, then I think there is going to continue to be, which is why over the last 10 to 15 years there was such a low period of inflation,
right,
in my opinion, because of all of the technological advances. And so as long as we continue to encourage that, then I think, inflation can stay under control. We saw this little spike. It was a once in a lifetime kind of event, something like you said, like we've never seen. And that's fine. Those things happen. Now, it doesn't mean everything's going to be fine on the back end. There's going to be repercussions in some way or another, but
I think this election is very important. I do think some of the stuff that's been out there that could, if we go one way or the other. In other words, I believe capitalism is great, and I believe our country is the best country in the world because of what we're allowed to do and what people can dream and do. And I think that's slowly eroding, and I hope that doesn't. I guess that's
Yeah.
I'm looking at it like a 50-something-year-old. I know 20 years ago, I was more optimistic, Matt. You see what you have to look forward to.
Yeah. No,
Crotchety old man.
I promised my kids I would never be as pessimistic as you are, John.
I promised my kids that too long ago, and look what I mean. I'm here. You know?
Yeah, I think you just have to. Yeah, I think we have to remain positive regardless of how many things there are to point at and look at and say, hey, this could go not our way, or hey, this could be difficult, or hey, this could lead to. All of that stuff's true, but
the one.
But I still think we have to be, as an investor, just looking at it through that lens. You have to remain optimistic about the long-term future.
Riveting.
I don't.
Yeah,
I
riveting
actually,
stuff.
we just said a lot of words. I don't know what we said.
I know it'll.
If you look at the markets year to date, everything is green. Fixed income is green. International is green. Green is good, by the way.
Green means good.
Green means good. Most equity indices are up double digits. Fixed income is up low single digits. Almost like everything is working this year, and it has been for the last year and a half or so. The question I get now is as summer ends, we head into the fourth quarter, what is there to be concerned about? Is there something on the horizon as we wrap up 24 and go into 25? And let's take the election out of it.
Yeah, John can't say all of the above.
Yeah.
Yeah.
Let's take the election out of it. But what is out there that we should be? And I'm going to put air quotes around the word worry.
Yeah.
Your thoughts?
Okay, global problems like Israel is continuing to attack, and I'm all for Israel, but that is going to get bigger and probably will get bigger. Ukraine, Russia, that's kind of been on the back burner, but that's still going on. It's still a pretty big mess. You've got China with their aspirations, and if they make any moves towards Taiwan, I mean, that could be a massive issue. But we've made it through the Ukraine. Ukraine's been going on forever, and Israel was attacked months ago, and we survived through that. But that's part of the outside the U.S. problems I think are there internally, and this is something that's more macro level, long-term level, but it should infuriate all of us. And this is my pessimist. It should infuriate you, Matt. Okay, government spending, our government spending has gotten out of control. Congress is having they're having a tissy fit right now about the next extending the credit card limit, and it's so frustrating to me, watching this, knowing that we were fiscally responsible at the end of Reagan and Clinton had us in the green, as and really 9/11 kind of threw us back into the red pretty heavy after 9/11.
Deficit spending.
And we've never caught up, right? But we don't have a massive war going on right now. There's no excuse for how much spending we're doing in Congress. And I think that ultimately someday somebody's going to have to pay that price. We're having to pay back that interest. And our U.S. government's biggest way of doing that is taxes. Mm-hmm. And so if taxes go up, so I think that there's little fears like that, just the government spending, a government overreach, and then the global issues that could leak into bigger things than just where they're at. That's my biggest concerns I hear from clients and that I think is out there.
I think the big thing for the market specifically between now and the end of the year would be pressure on the consumer. Mm-hmm. And what we were just talking about, inflation. It is real. Things are really stinking expensive, and the consumer has had to adjust. And so obviously, in any type of period like that where you see consumer spend, adjust, or change, right? Some companies benefit from that, mm-hmm. others don't. And so how that impacts the market and how much the consumer pulls back, I think in the near term is probably one of the, in the near term, meaning the next 6 to 12 months, that's probably one of the biggest things that I think could have a if earnings start to really slow down and because people aren't spending. And I've heard some things that I can't say on the podcast from just people about like some things that their companies have asked them to do about like, hey, how can we pull some next quarter business into this quarter? Mm-hmm. How can we, with publicly traded companies. Yeah. So this is like, why they're doing that. And that's never a good thing when you hear that, right? Because the numbers are going to be maybe softer than expected. And so it's just interesting to when you start hearing those things and then you look out and you go to the grocery store, I think that will be one of the things or the thing that could impact the market in the near term.
Yeah. My opinion, just to add to this a little bit, and I agree with Matt. I think that inflation is beginning to be very heavy. 6 months ago it was there, but people were still, kind of living in la la land. Now it's, your people are feeling it.
Well, they've maxed out their credit cards, so now you can't spend as much. Discretionary, by the way, consumer discretionary stocks year to date are up 9.74%. Consumer staples, which we have to have, are up 19.82% year to date. So there's been a shift from discretionary to staples.
And to explain that to our listeners, it's people going to Best Buy and looking for a new TV.
That's discretionary.
That's going on a cruise.
That's discretionary.
Yeah. Going to Walmart buying toothpaste, deodorant, and toilet paper. That's consumer staples. That's something that you need. The geopolitical part. I'm going to get back to what you're talking about. Jaime Dimon, CEO of J.P. Morgan. When he talks, people listen. A year ago, he talked about the geopolitical issues. This past week, he spoke on it again. There's a lot of truth to what he's saying from the standpoint of, I think the markets are pricing in that everything's going to be okay. It only takes one missile, one bomb to completely end that. And his comments were, energy is priced to perfection in that, everything's all good in the world right now with oil, but if either one of those conflicts over there begins to spread, which there's no guarantee that it doesn't, then, you could see oil race up to, 100 plus a barrel. And I'm not saying it does, but I'm just saying there are hot spots that we cannot ignore. And I think over the last year, kind of like you said, ho-hum, Russia, Ukraine, that may be going on now for 10 years. Who knows? But we can't ignore it.
The Israel thing is a big deal.
In the last couple of weeks, it has really begun to escalate.
Yeah.
And so tying this back to the market, so if you look back, and I'm not trying to say that, next time won't be different or any kind of statement like that. But if you look at the largest moves in market history, it has rarely, if ever, been something that was staring you in the face that everyone was talking about.
Very true.
Right?
Yeah.
The big moves.
Yeah.
Now, we've been through recessions that were because of other stuff that people were aware of. We kind of knew. But the big, like, shock moves in the market.
Good or bad.
Were not things that happened that we talked about for 2 years.
Yeah.
And then they finally came to fruition. It was typically stuff that maybe a few people had talked about, but it was like very quiet, very not in mainstream media. And then it happens, the market reacts in a huge way. And so I say all that to say, not to like make a point or try to say that none of this could lead to some major move in the market, but just historically speaking, it's not been this easy to set and wait and forecast and say like, this is what's going to drive the market,
Sure. No, I agree. 2007 financial crisis, 2008. There was a lot of things leading up to that, and it took years for that to actually, for it to unwind and create the recession of 2008. And nobody really would say they saw it coming. Now they would say they saw it coming, but the people that wrote The Big Short and Boomerang saw it coming.
But nobody leading up to it was sitting here talking about.
No,
and I say nobody. The mainstream media was.
Mainstream media did not latch on to that. No. But
yeah.
Mainstream media to me is kind of funny. It's kind of like being a weatherman. I'm not poking on weathermen, but you're 100% accurate of what happened yesterday. It is very hard to predict tomorrow. Sure. And a lot of times, like the analysts I listen to on it is amazing because I watch the same kind of shows every day, and the same analysts come on, and they've been on for years. I've watched them, some of them since 2005, right? And they go with the flow of. So when you say that, like it's like when things are going well, they act like that's the just.
I mean, my number one piece of advice for anyone is to don't watch the news.
Yeah.
Don't watch CNBC.
Yeah.
Don't watch anything.
Yeah.
I mean, seriously, because
if you
it's
do
all crap.
No, it is. It is. It's all emotional driven, right? Emotion kills the investor. And what I think the biggest mistake made in 2008, for example, huge mistake made by a lot of investors that didn't have good advice. They got scared when the market was down 50%. They pulled everything out. Yeah. And I know people that had never gotten back in. Yeah. I've talked to people that never got back in and they missed out. I mean, the Dow was at 6,400 when they got out, and it's at 42,000 today. I mean, and I'm sitting here acting like I'm the bearish guy in this office. I'm a huge bull. I love the market.
Right.
And I mean, I think it's the best place to be. I just think there's things to be aware of.
100%.
But the worst mistake is getting emotional and not having a team to help you guide you through it.
Yeah.
That I think if you have that, you're gonna win. And there's opportunities created if there's a downturn.
There's always opportunities. That's the thing is that somebody's always making money.
Somebody's always making money,
no matter what you're going through.
Gold is up 26% today, or I mean this year.
Today,
not today.
Today,
year to date.
It's the biggest day in gold for gold.
But
in
it is an anomaly.
Missed that one.
Like when people went to gold because they were nervous about the market.
Right.
They've made money as well as the market. Right.
Sure.
Correct.
So there's always opportunity created regardless of what the situation is. So
yeah.
Anyway.
Yeah. Well, a lot going on. I mean, these are real things. Obviously, everybody's aware of them. We're just here in front of the mic talking about it. But yeah, make sure you have a plan and you're allocated, appropriately. And so
Things will work out.
Things will be fine.
Yep.
For sure. Anything else? Any parting thoughts or words of wisdom?
No, just remember social media. Give us a thumbs up.
Yeah.
Like on YouTube.
Yeah.
Wherever you're viewing this, tell your friends, family. Our listeners and viewers continue to go up each week, so we appreciate that. But give us a like.
Yeah, for sure. We have fun doing this. I know we have a guest coming up.
We do.
Here in the next few weeks, I think. So be on the lookout for that. Still trying to get some good, high quality, super intelligent guests on here so we can ask them hard questions. So anyways, as always, we appreciate you guys listening and watching, and we'll see you next week.